Good evening. How are you? Are you good? This is Tapelo from Tapelo Investment Trading, right? On this session, I will be teaching you about the M's and W, higher highs, lower lows, and also the mullahs and the wheelies strategy, right? Let me show you. This is the well known as the M's and W's. I know you've heard about this as a trader, right? And also well known as the mullahs, which is money, currency, all of that, right? And the wheelies. And then the third part is known as the higher highs, and the lower lows of the day. And also they are known as the double top, and the double bottom strategy. Sorry about that. The double bottom strategy, right? The benefit about this strategy is that you will find it in every pair, every currency pair. You will find the M's and W each and every day. First of all is that these trades, they take place daily on a normal day, right? Secondly, you can trade on every currency. This strategy, right? You can trade on every currency. Thirdly, you use a higher risk percentage. Simply means for the traders that trade this strategy, it's not that high. You don't have a high percentage of losing. You have a low percentage of losing, right? And also, when you are using this strategy, you apply management risk. These are the benefits. You trade on every currency, trade on each and every day for daily traders. Each and every currency you will find this kind of a strategy taking place on a normal day, each and every day, right? So how do you use this strategy? Let me show you the key benefits of using this strategy, or the factors of this strategy, right? Is that first of all, you trade it using the 15-minute chart. Or 1 hour or 4-hour chart. Secondly, you use 15 EMA, moving average, right? You don't just assume that there is a formation of an M or a W without the confirmation of a 15-minute EMA moving average. Thirdly, you trade after confirmation of a second leg, right? You will see when I explain this strategy more further on details or practically so, because you don't just assume that you have a moving average, or you don't just assume that you have an M or a W. You don't assume. You make sure. You have to wait first for an M for this to be formed, right? Secondly, you have to wait for this pattern to be formed before entering the market, right? So first of all, you trade it on 15-minute chart, 1-hour chart, or 4-hour chart, right? And you use the 15 EMA moving average, which I will explain in detail. And also thirdly, you trade after the confirmation of a second leg. After the completion of a second leg, then you can enter the market. Thirdly, let me show you the risks of using this strategy. The risk. risk factor for this strategy, right? One, use fundamentals. Let me just make it, put it in fundamentals. Only, please know that only fundamentals can affect this strategy. When they have a high impact of news, when the fundamentals have a high impact, there's a chance that they can affect the M's or the W's at that time, right? This is the only risk reward that can be given to this strategy. Only this impact can affect this strategy. Let me show you now how to apply this strategy on a real chart or on a MetaTrader 4. Let's make it clear. MT4 or MT5. You can trade it using the MT4 or the MT5, right? First of all, let me show you the double top. I will show you the double top right now. I will start with the M's of the day, right? Remember, these formations take place each and every day on a normal day. Now, you have the double top. This is the M. This is the double top, right? This is the double top formations. The M formations, which is the higher high of the day. You must first have the higher high of the day, the highest points of the day, or the high price of the day, the higher highs of the day, right? Which is the moolah in other words. Many traders will tell you that experience failures. And then secondly, you have the double top. This is the double top, which is the W, right? On a real life situation, the double top formations, double top formation, right? Which is the lower low of the day, and sorry about that, and then which is known as the wheelies, right? We have the double top firstly, we have the second, which is the double top formations. Now, the double top formations are known as the higher highs of the day. They are known as the mullahs, right? And then secondly, the double top formations, they are known as the lower lows of the day and the wheelies. Now, using this strategy, you will find that there is other pairs, right? Or not pairs, but there is another benefit of using this strategy, which you will find a pattern like this. I know you will find a pattern like this. And then also you will find a pattern like this one, which is the first, the second, and the third leg, right? And also here, which is the first, the second, and the third leg. Now you no longer have 2 legs or 2 points at the price, but you have 3, which means you don't have something that is called double. You have triple now, which is a triple top formations. Right? And then you have a triple bottom formations. I know, right? I will explain it when using the strategy, using the moving average, how to figure out that this is a triple bottom and this is a triple top formation. It's the same thing as the double top, but now you have 3 points at a certain level. When something is double, right, you only have 2 points. But here you have 3 points. And also on the triple bottom, you have 3 points underneath the price, right? Taking place at that strategy or at that time. Simply means because the market has been affected by news, then you will have a high chance of having another third or second leg. And also you will find out that you will have something like this, because we are talking about pattern formation. So I just have to show you how to identify these patterns. They look the same, but they are not the same. Let me show you again. You will have this. Please note that for fundamental traders, this is not your strategy. This strategy is technically used by technical traders only, because we follow the formations, we follow the structures, we don't follow the news, right? This is the leg. No, not the leg. Basically, this is the shoulder. Okay, you have your first shoulder on the left, you have your second shoulder on the right, and you have a head, which is the longest W or the longest triangle on top, right? And then now you have the shoulder again, and you have the head, and you have the shoulder. I think this strategy I will explain it on a second video, because this is something different. This is what you call a head and shoulder pattern, head and shoulder strategy. Now here you have the head and shoulders, right? You have your head and your shoulders, right? Secondly, this is the inverse, head and shoulder strategy. Now for more information about the head and shoulder, and the head and shoulder strategy is there. You trade it on 1 hour, 4 hours only. Don't trade it on 15-minute chart, it's too risky, right? You trade this on a 1 hour chart. For traders that are trading head and shoulders, you trade for 1 hour and a 4 hour, and also a daily chart, right? Daily time frame, sorry about that. Right now, this is also what you will consume or you will go against in the market when you are trading M's and W formations. Just when you are waiting for an M to be formed, then automatically, or sometimes you'll find that this pattern formed, right? Simply means it's the same thing. The market is gonna change direction, but there are different formulations or different patterns, right? Let me show you now. Now, this is the main topic of today. So if you have your pen and your paper, please note this down. This is very important. How to apply M's and W's using the 15 EMA moving average. Let me show you how to trade M's and W's using the 15 EMA moving average. I know I talk very quickly, right? But here I will try to be slow. I will try to move at your pace, right? So that you can understand each and every concept or each and every key factor about using this. Okay? Now what happens is that you have your M's, right? Remember, this is the higher high of the day. So you have to wait for the market to form a higher high before entering the market. Also, lower low of the day. Remember, you have to wait for the market to reach its lowest point, its lowest price action taking place at that price before entering the market. You have to wait for the first and the second leg to be complete. For this one, you have to wait for the first leg to be complete and the second leg to be complete. Now, here is the main problem that many traders make, or the main mistake that we make as traders. Now, you will find out that the market has been trending on an upside, or the market was bullish, right? Let's take Euro USD for example. These are the pairs that are likely to to have such patterns each and every day, right? Now you have a trend that is going bullish. We are going bullish, right? I'll just show you. We have a bullish trend taking place on Euro USD, right? Now, all of a sudden, we have this. Now, we have what we call a pullback. All of a sudden, the market has been going up, and then all of a sudden, at a certain price, now there's a rejection taking place there. Now there's something taking place as traders, technical traders. Now we can see that something is taking place in the market. There's slight chances. There is a possibility that there will be chances of a downtrend soon or later, right? Or at this time, right? Now, what we are hoping is that now we have the first leg. We see that the market has been going up. Now, all of a sudden, the market rejected. Now, the market went down for a little bit. And then we wait for the market. Right? Now, note that when the market reaches this level again, we know as technical traders, each and every time, wherever there is a rejection at a certain price, we put our horizontal line there. Right? So that we can be aware that for the next time, when the market reaches the same price or touches the same level, now we know something is going to happen. There is a resistance taking place, or there is a support taking place at that price, right? Now, what's happening is that the market reaches this level again and then test it again, only to find out that it cannot break out because now we have a resistance there. Okay? Now, each and every time when you have a resistance in a trend, what's going to happen is that there will be 2 or 3 touches taking place at that price just to test if that resistance is strong or not. Okay? Now, what happens is that the market resisted the buyers now. Now, the market decided to go bearish. Now, as technical traders, we know when the market touches this level again and it doesn't have a breakout out of this level, we know now there is a high possibility or there is a chances that we can enter the market for a sell. Okay? Now, here is the mistake we make. I wanted to show you. Please don't make the same mistake, traders, right? Don't make the same mistake. Please do not make this mistake because you will lose your money. Now, when you have your first leg and now the market tests this price and the market goes up again, and when the market reaches this level, do not assume that at this level the market automatically is going to go down. No, we don't do that. We don't do it. We don't assume in the market, right? We have to wait first for the formation to be complete before entering the market. Now, the market decides that, okay, fine. You as a trader, you can see that the market went to this level and now you enter for a sell there. And guess what? The market continues for an uptrend. Then the market continues on an uptrend. You see, this is the mistake that we slightly or each and every time we make. And then this what happens. And guess what? You lose your money because your stop loss is somewhere here. Then guess what? Stop loss hit unnecessary because you couldn't wait. Right? This strategy will require you to be a patient trader. You have to wait for the formation to be complete first before entering the market. You have to wait. Wait until the completion is formed. Okay? Now, you have to wait for this to take place. Now, when you see the market taking place at this price, and then you see a bullish engulfing pattern taking place, then we can assume, and then it closes underneath a certain price under this level, then we can assume that we have a change in a trend. Now we have a downtrend that's going to take place. Okay? Now I'm going to show you now how to use this strategy using the moving average. Move with me, run with me, please. Now this is your M formation, right? Let me just draw it. This is your information. Right now you have your horizontal lines there, and then you have another horizontal line there. Okay, now let's just put it there. For example, okay, let me just delete or erase this part so that you can see clearly. Now the market is moving. This is the first leg. It has been formed. Fine. Now the market decided to go up there to that price, right? We have drawn our resistance line, right? Now what's gonna happen is that we're gonna wait for the market to have a bearish engulfing pattern there and close underneath this resistance line. If we close underneath this resistance line, now we know that we have a probability that the market will go down. Now this is what we do, right? This is what we do. You will have your 13 EMA moving average, right? And it will be like this. There is our moving average. It will be like something like that, right? Even though I'm not exact in my drawing, but it will be something like this taking place automatically. Now what's happening is that after we have this engulfing pattern taking place, right, we can see that, okay, fine, we have a bearish engulfing pattern there, or a bearish engulfing candlestick there. Now there is a chances that we're gonna go down, right? There is a possibility that the market is gonna fall. No, we don't automatically enter for a sell. This is wrong. Okay, even though we have this bearish engulfing pattern, it doesn't simply mean that we're gonna go down or it's a double top formation that is complete, right? Although we know that we have a second leg that is being formed. Fine, we have the second leg, but we still have to wait just to enter a high percentage trade, 100% accurate trade, right? Now at this moment, at this time, it's still a 20% chance or a 20% trade. We don't want to do that. We are not risking. We are trading. We are traders who make money, not risk money. Now this is what's happening, right? All you have to do is that you have to wait for the market to close, to go down and close underneath the 13 EMA moving average. I mean the 13 EMA moving average, not the 15, right? The 15 is for head and shoulders. Now here we are using the 13 EMA. Sorry about that. Now we wait for the market to close underneath the moving average. The 13 EMA moving average. Now we have to wait for the market to close underneath this moving average. Then we can sell. That is our entry level. That is our entry signal, right? Now let me draw it very nicely so that you can see again, right? Now we have Euro USD. Remember, you can trade this on each and every currency, right? Most especially on a 15-minute chart and 1 hour, right? Now what's happening is that you have this. Okay, let me make it a little bit bigger. We do big things, big money, big things, big everything. Okay, now you have your resistance level. Okay, now you have your first leg. This is the first leg. Your first leg. Secondly, this will be your second leg. Okay, now your formation is complete, but we still have to wait for the confirmation of a 13 EMA. Okay, now this is what's gonna happen, slightly gonna happen, most probably gonna happen in the market. Now what happens that you have your first leg. This is your first touch, right? And then you have your second leg, which is the second touch of your double top. Now we have to collect the touches of the double top and also of the moving average. We have to have 4 or 5, I think 4 or 5 touches before confirming this strategy. First of all, this is what you do. You see, the market passed, right, this moving average here, and then what happens is that the market resisted the buyers here at this level, which means now we will have a resistance level taking place there, right? And the market went down. Okay, now this is our first touch, because you can see when the market passes this moving average, we have a touch here, right? The candles decided to do what? To touch our moving average there at that level. Okay, now the market reached this point. At this point again, we draw a line there. We draw a slight line. I won't make it bigger because it's not really that necessary. Now we have a line there, and then the market did what? It went up. Okay, now we draw our line here, and also this is our first touch, right? Okay, let me just write the first touch, right? And then this is the second touch. Okay, and now again the market decided to go up, and then it touched this. There is a collapsing, or there is a touch between this pattern and the moving average, and now this will be our third touch, right? This is our first touch, the moving average and the pattern, right? And then again the second touch, right? And this will be our third touch. And now what happens is that the market will go up, right, up to this level. And also what we have here is that the market resisted the buyers, meaning that we have a chance, a probability taking place that the market will go down, right, if the market doesn't break out of this resistance line. And guess what? The market decided now that sellers will be introduced in the market to enter the market, right? And then what happens is that the market went down. Now, before entering this strategy, we have to wait for the fourth touch, which will be here, right? The fourth touch. After breaking out of this touch, after breaking out of this moving average right here, then we will have our entry level. That will be our entry level. Now let's make another example. Let me just do this, right? Let's make another example. Right, this is the example, right? Exactly, this is an accurate one. Now this is our first leg, this is our second leg, okay, of a N and W. This is a double top, right? Our double top. Now this is the first touch, second touch, third touch, right? And the market resisted here. Fourth touch. Where is our entry level? This is our entry level. First take profit will be at this level again. This is our first TP. Now our second take profit will be down there. Our second TP will be down there. Okay, now let's do it with the lower low of the day, a W formation, the double top. Now let's introduce now the double bottom. Okay, now we will have our W like this. This is our W, right? It's the same thing. And then we will have our line right there, and then we will have our 13 moving average there, right? So what's happening is that this will be our first leg, this will be our second leg, right? Remember, we are using the 13 EMA moving average, right? Now this will be our first touch. Remember, this will be our second touch. This will be our third touch. This will be our fourth touch. Okay, now after touching this price again for the fourth time, now after we break out of this level, this will be our entry point. This will be our entry level. This will be our first take profit, and somewhere there will be our second take profit. Okay, you wait for the market to form an AW, right? Wait for the market to form the second leg, which is very important. After completing the second leg, now you have to count your touches. You will have your first touch of the moving average. You have the second touch right there where the market had a pullback, and you will have the third touch right there, right? And then you will have the fourth touch after the completion of a second leg. And then after you have this touch, when the market breaks up, I think your candlestick will be up there above this touch. Your candlestick will close. After your candlestick closes above this touch, then you will have your entry level, which will go for a buy. You buy, and then this will be your first take profit, and then this will be your second take profit. This is a high chance trade, 100% accurate trade. If you use this strategy, you will be profitable, you will make money. And this strategy, one thing about this strategy, is easy to be used. Each and every trader can use this strategy. It's easy as ABC, right? And you trade it on 15 minutes. These are important factors, right? 15-minute chart for those traders that trade each and every day. If you are a trader that wants to trade each and every day, you will have these patterns on 15-minute chart. Most probably around 15:30 p.m. and 15:30 a.m. When you are using this strategy, right? One thing about this strategy is that your trading sessions will be around 15:30 p.m. and 15:30 a.m. because these are the times where we will have high impact of news, high changes, high probability of changes in the market because of news, right? And also, when you are trading, when you traded an M using the 15-minute chart, right? When you traded your M at this time, expect the market to change its formation around this time in the morning and form a W now. But say, what are you saying? Let me show you what I'm talking about. Make this thing a little bit fun. Forex is your friend. Remember, Forex is your friend. I've said it on my previous video that Forex is your friend. You have to talk with the chart. You have to talk with the pattern formations. You have to speak with it, right? It has to speak with you too. You have to communicate with the market. Now, this is what's happening. Okay, I will just do this. Okay, and then this takes place at this time. Now you are in the market. You've entered your entry level. It's right there. Right now you are eating your pips. Take profit one. You are eating your pips. Now, what happens is that this will take place. This is likely to take place, right? What's gonna happen is that you're gonna have this underneath. This is fine, but it's like this, and then you have your entry. No, let me just do it like you have your entry somewhere there. You take profit one, take profit. Okay, I will show you something. I will show you something. Let's do this. Take profit too. Okay. Now this is what I was talking about, guys. This is what I was talking about, guys. Ever since I've been trading, I have faced this taking place, right? These are just arrows, you know. I have faced this taking place. When you take an entry using the 15-minute, remember this is the 15-minute, this is a possibility, right? Now you have your M, or the market reach its highest level, its highest price at 3:30 p.m. on the afternoon, right? Now there is a chance that at 3:30 a.m. early mornings that there will be a formation of a W now taking place, meaning that the market will change the movement, the trend will change now from going bearish to bullish. Okay, this was now a downtrend. Now this is an uptrend. Okay, now when you took this trade, right, from this level up to this level, now you know that if you have a completion of a W down there, when the market reaches its lower low, where are we gonna go? Where will your take profit be? Your take profit 1 can be there. Your take profit 2 can be right there at the resistance. Now this level will now be the support. Resistance level, now the support level. Now this will be your take profit. Now if you have a sell again, this will be your what? Your take profit. Okay, let me show it to you. Let me give you the way it is. Let me give you the market as it is. No shortcuts, nothing much, just the way it is. Now this is your two lines, right? This is your line, simple as it is. Now you have your M there, you have your W there, you have your M there, right? This will be your entry, for example. Okay, let's not make this. I know a lot of traders will do this. Please don't do that. Your entry must be somewhere here, right? Your entry, and then TP1, then here this level will be your TP2, right? And then if you trade the buy here, this will be your entry, and then your TP1 somewhere there, and then this at this level will be your TP2, and then this is your resistance level, and then this is your support level. You see, now we are just playing with the M's and W. We are playing with the market. Now, what you have to know and code is that when you have your M, you have your resistance. Don't forget that line, the horizontal line of the resistance level, so that when the market tests it again, you have a chance of entering again. Now also, when the market forms a W underneath there, it forms an M at 15:30, right, during the day, and then it forms a W early mornings. Now what's happening is that you have to know or draw your support level. Make sure you have those two levels there, the support and your resistance level. The resistance level, right, your resistance level, the main important thing about the resistance level is that it is resisting the bias. Okay, and it's an opportunity for sellers to enter the market. And then for your support level is that it is supporting the bias, right? And also is giving an opportunity the level where there is an opportunity for buyers to enter the market. Okay, now when you see this, right, when the market is at the resistance, you sell. When the market is at the support level, you buy. Same thing. You sell, you buy. Okay, now in order to conclude this strategy, for us to conclude this strategy, we can say this strategy is for technical traders. If you are a technical trader, this strategy will be more profitable for you. This strategy concludes price action, right? This strategy is for patient traders, those who wait for the market, or those who wait for the pattern to be formed or the formations to be formed, those who read the candles, bullish engulfing patterns, all those candles, those hanging men, those this price action, right? And also in this strategy you will have your resistance levels, right? And you will have your support levels. Remember, when you're using this strategy, it's 15-minute chart. You use it on the 15-minute chart time frame, the 1 hour, and the 4 hour, right? And when you're using this strategy, you use this strategy with the 15 EMA moving average exponential. This is very important, guys, so I will just give you just seconds just to write this thing down, because this is the most important thing about using this strategy. This strategy is for technical traders. You use price action for this strategy, right? You must be patient, wait for the formations to be complete, right? You must have your resistance levels in place, you must have your support levels in place, and also you use this strategy on a 15-minute time frame, 1 hour time frame, and 4 hour time frame. And also you have to apply the 15 EMA moving average. Guys, this strategy takes place each and every day, traders. I hope this strategy will improve your trading experience, or it will improve your trading journal or your trading setups, or it will improve the way you approach the market, right? And thank you very much for this time, and thank you for your time. I hope you will benefit from all of this strategy. Thank you very much, guys.